personal deductible contributions. This is if you're less than 75, you can make contributions to super, and it works similar to salary sacrifice. It's basically if you're incurring tax, whether that be income tax or you've sold an asset, for example, and incurred capital gains tax, you can reduce the tax that you're paying if you're paying tax at a marginal tax rate higher than 30%, so more than $37,000, by making a contribution to super. The rule, it's kind of the opposite to the co-contribution rule, is a 10% test. You need to be what they call substantially self-employed to do this. So you need to have your income from employment purposes less than 10% of your total income. So it's basically the opposite of that co-contribution test that we talked about earlier. So how it works is that, or what the benefit is, that you can basically reduce your income tax. This is an example of how it might work. So this is if you're self-employed, for example. You might have $80,000 of income. If you don't make any deduction, then you'll end up paying tax. So if you put the contribution, we're saying we're putting a contribution into super of $20,000 after tax, whereas if we put it into super before tax, we'd end up saving $3,300. Go back and review the figures if you want to check out that in a bit more detail. The most common example where this is applied is you're looking at retiring. You've got investment properties that you no longer want to manage. You're keen to get your money into the super environment because it's a tax-effective environment. And what you're doing is you're selling those investment properties and you're incurring a capital gain. You've stopped work, but you want to get the money into the super environment. And basically, you're able to claim a deduction. And in this case, we're claiming a deduction of $50,000. If we didn't claim a deduction, we would be paying total tax of $34,850. But because of the deduction that we've made, even after the contributions tax, we're paying tax. We're saving about $11,000 in tax. So great if you're selling assets and wanting to move money into the tax-effective super environment. There's just the eligibility criteria for you. I don't need to go into the full details there. Go back and review it if you're in the recording if you want to see the full details.